Time for some overlooked stocks. George Tsilis, the movers that you missed in today's session, GT. Let's talk some Groupon first. Back from the dead?
You know, Jay, I think it is. This is an interesting company now, Groupon. We know Groupon is sort of that company that deals with coupons and deals. One of the things that the Groupon has done, sort of underlying this market, OJs, is actually made a conversion away from the goods side, which was a low-margin business, to services, especially experiences. But in fact, when they made this transition, COVID came around. And so there was sort of a double whammy for the company in the last year, with the exception of what's going on as of recently. Now, we know Groupon is the middleman between consumers and merchants, but now it's becoming more of a local services and experience company. They do, of course, get a portion of any sale using their voucher-based network. There's actually 39 million active users on Groupon, and I think this is a reopening trade alongside some of the other travel companies like Expedia, TripAdvisors. I think Groupon is another name to certainly consider based upon a reopening. Now, they actually reported earnings very quietly last Friday, and this is a little takeaway. We had a pretty challenging week last week, a lot of noise, but this is why it pays attention, or it actually pays off to pay attention to companies that actually reported some fine earnings in an environment which is very chaotic. And Groupon is one. Today, the stock is up 31%. Last I looked, amongst a huge slew of upgrades from JP Morgan, Credit Suisse, UBS, all increased their price targets on numbers which were actually low in terms of total sales and earnings, but better than expected as the company seems to be recovering, but also doing a lot of things to change their business to go into higher margin services. The other thing is they've actually cut back on staff as well as some internal infrastructure. They have about $860 million in cash with about $1.6 billion in market cap. So half the stock price, OJ, is cash, which is actually pretty remarkable for a company that's in this environment, challenging environment, but also, again, is ripe, I suggest, for a reopening economy.
Okay. So, George, this short-term move is impressive of 32%. The year-long move looks really good. But we zoom out, and Groupon's history still looks a little bit troublesome. I mean, what can change basically years of markets discovering that the service is hard to compete with e-commerce plays, social media, all these different ways for people to use discounts and just go through their own discounting mechanisms?
So you're a really good point, OJ. First off, I think the challenges Groupon faced is that e-commerce. When everyone's looking for deals from an e-commerce standpoint, with so much information available and so many different merchants to choose from, I think that side of their business faced a lot of competitive threats. And I think, and it's not, I think, it did. The company did struggle for quite a many years. And I think the company eventually made this conversion. They just said, we're out of the goods side, trying to compete with the likes of, Walmart and Amazon, when all these companies are really competing down prices. And so it became, again, sort of less appetizing for people to use Groupon services for coupons when they can always find a better deal elsewhere. And that's where the challenge lies for Groupon. So they decided to venture off into areas where there wasn't a lot of competition. And when it comes down to services, whether it be like restaurant services, hotel services, which I think is a very big catalyst in terms of tourism and leisure coming forward, but even concert venue services and things like that. It's more of an experience company, whether it's coupons for nightclub visits and things like that.
Okay.
I think that's really the crux. And if you look at and you think about it, that they face less competition in that space, but it was a long turnaround. And the company itself has been turning that business around, regrouping, no pun intended, getting in areas where it faces less competition, but at the same time, they've been cleaning up the cost of their business. They've also, again, raised a lot of cash, and I think that's been favorable as it's now reemerged as a potential player in the space for venue activities and, of course, experiences. I think you could put Groupon in the same sort of camp now as the TripAdvisor, as well as maybe the Airbnbs. All right. Not necessarily exact same companies, but I think if you're looking for local experiences, people are going to be using Groupon going forward. From the standpoint of looking for deals.
Okay, so it's within this reopening category at the time. Let's see what happens next.
Yeah.
Got a lot of work to do technically on this chart, right? And the first is is whatever comes next. Rejection here and selling from here would not be good because this has been an area that in the past has been really important for it. So we'll see what happens to see if there's a real sentiment turnaround here, George. At least the narrative can work for Groupon. Okay, and I'm not ever going to talk too bad about them because they've literally got a roof over our head right now. This is the Groupon building, so I gotta watch my back. George, let's go over to
you gotta watch out, OJ.
Yeah, Wi-Fi next. Ticker Wi-Fi, that is. Boingo, George, you looking at hotspots today?
Yeah, I mean, the Boingo Wireless, this is a company, if you've ever been to an airport, I'm sure a lot of people have, but maybe not as of recent, but Wi-Fi hotspots. It's more of a Wi-Fi network traffic company. They have products as well as connectivity solutions, but it's also a wireless rights company, and I think that's an important catalyst for the company's business. But venues like airports, transportation hubs, stadiums, arenas, military bases is another place they actually serve customers, as well as multifamily. I think this is another area that's interesting in the Wi-Fi space right now. But anything from smartphones, laptops, anything that, of course, has Wi-Fi capable infrastructure, this is the kind of company that does so in a public domain. And a couple of catalysts, one is they actually reported earnings which were not as bad as expected, at least from an earnings front. But the other thing is the company was bought out. It looks like it's being taken private for about $14 a share by Digital Colony Group, which is essentially a private equity capital group. And I think they see some catalyst here for the business going forward, especially dealing with a company that's been very challenged in terms of top line sales, which were down about 40 to 50% all year, because everything that has to do with the public domain for wireless infrastructure was really hit this last year. But I think going forward, this company has some prospects, and this is why private equity sees a lot of value in a company like this. Now, I do know that GoGo, which is the Wi-Fi hotspots in the airplanes, that was recently also, if I'm not mistaken, there was a proposed acquisition of that company as well. So there seems to be something going on in this particular public domain Wi-Fi space. There may have been some changes from an FCC standpoint, maybe last year in the Trump administration, I'm not sure. But that possibly is a catalyst on why we're seeing some private equity take interest in companies like this. Okay.
George, Wi-Fi popping to $14.26, high into the range it's been in for the past year. Maybe a little bit more traffic, and folks can be reminded what it's like to be in the airport. About 30% of people did travel last summer, but obviously, pretty low rate compared to the normal. George,
Sure.
You got one more for us, all right? Give me the 60-second take here on your last one. GT, a company that certainly is overlooked. Don't think it's been in this category before on our block. What are you looking at here? KOPN. Has this one been on here?
Yeah, so Kopn Industries. We haven't talked about this one. I've been watching this one for a little while now, OJ.
Okay.
It's been moving higher. It did pull back because of the recent pullback in the valuation correction in the tech space. Interesting company. Now, I think there's a little bit of a micro trend going on, and I'll elaborate quickly on this,
Whoa.
but it seems to be that a lot of companies that have government and military application are now essentially selling to the commercial and potentially the consumer side of the equation. And Kopn's actually a company that provides head-worn and handheld systems that have to do with infrared, but also have to do with hands-free visualization, LCD, OLED technologies that are now, I think, very interesting, not just in the military application for like operations and things of that capacity, but also from the consumer and the enterprise side. I think augmented reality and sort of wearable devices for visual augmented reality, but also when it comes down to the wearable devices, that seems to be hot right now. We talked about a company like Vuzix that was last week. Both of these companies are in the augmented virtual reality space. They're technology companies, and both are still trending quite nicely, despite the fact that we got a nice pullback in the market in the last couple of weeks. But Kopn's technologies, which include the LCD, OLED technologies, and silicon technologies, have been used by military and avionics industries. But I think there's a huge catalyst for them in the simulation and training. 737 MAX was sold initially as a non-simulated needed airline. I think that's changed.
Well, yeah, definitely.
The other thing is, I think there's a big application in the consumer and the enterprise space, especially in the medical field, but also in the services field.
All right, not making any money right now, but they got a little revenue, so that's enough for the stock
They have earnings
market
tomorrow, so watch out.
Okay. Yeah, very volatile. All right, George, thanks. Think that was over 60 seconds, but that's all right, George. Good info. We got to run. Appreciate it, Mr.
I'm trying, OJ.